Hello and welcome to Bazaar Morning Call. I'm Prashant. With me, my colleague Sonia and Nigel. Getting closer and closer to the end of the week and getting closer to Sonia's holiday as well, right, Sonia?
Yeah. Getting closer to all of our holidays towards the end of the year, guys.
We'll
Come on.
More cheerful Sonia than usual today.
No, I'm cheering because of the game yesterday,
Wow.
Japan, Germany.
I missed it. But apparently it was a good game, right?
It was spectacular.
And it was amazing to see those guys. It's the second upset after what happened with Saudi Arabia. It was just phenomenal. And Japan has been winning hearts, right? We were talking about this yesterday as to how even when it was not their game, after the game got over, the Japanese folk went and cleaned up the entire stadium. And they did it once again. I mean, these little things really are so heartwarming.
I think, Sonia, you kept it as an open-ended question yesterday, right? Will this upset come about? And I couldn't believe my eyes because even in the second half, the kind of fight that the Japanese were putting in was spectacular. Even when they were 1-0 down and they scored 2 goals, the quality of Asian football, yet again, amazing. Prashant, years ago, you would never imagine a European or a Latin America team being challenged by an Asian team. We've done it twice in 2 days. Wow.
And actually in all sports, right? Not just football, but across the board. You're absolutely right. By the way,
that Belgium, Canada? That as well, right?
1-0.
That was 1-0.
Yesterday was a washout for me. But, I want to show my kids the players cleaning up the stadium. Some inspiration to clean up after them. So,
you wish.
Let's just look at the markets because we've seen some large moves, big moves, right? So you've got the FOMC minutes which show that a slower pace of rate increases are coming. So that's point number 1. And we'll discuss this in some more detail a little later. Equities are higher, yields are lower. That is point number 2. Equities are not up that much, 1% or so, but the yield plunge is quite large. The dollar consequently is lower. So those are the big global cues. SGX Nifty futures will come up on your screen. They're up, indicating a 85 point upside. 18,338 is where that is at. Basically, it'll take us back to, with that kind of a level, it'll take us right back to the 61.8% retracement of the recent fall that we had seen. So lots to talk about here this morning. Guys, hi.
Oh, absolutely. And there is cheer across the market, right? I mean, you can see it in the data that has come through. Not only is the SGX up about 90 points, the big headline, and of course we'll talk about that in greater detail, is the Fed minutes signaling smaller rate hikes going ahead. And that is what the market really wanted to hear. The fact that perhaps, the central bank is now seeing some progress in the fight against inflation and may not need to get more aggressive in terms of rate hikes. And that's something that the bulls will take with both hands today. Adding to that, of course, is the further fall that we've seen in crude prices, which is positive for markets. So all of this put together, I think is going to be a handsome rally today. Now, if you look at the other cues, the US markets are closed later today for Thanksgiving, so no cues coming in from there. But for our own markets, it's been the 4th day of selling by FIIs, although the quantum is not as high as what we've seen in the last couple of days. But yes, almost 4,000 crores of selling in the last 4 days. So just keep that on your radar. Remember, the range for this market has been 18,000 to 18,300. Would be interesting to see if this news flow could take the market above that range. And that's something that perhaps I'm looking at. Let's see how it plays out. But Prashant, that's the big cue, right? I mean, we were hoping, or at least the bulls were hoping, that at some point that pivot would come. And you're smelling it now in the FOMC minutes.
I don't know if we'd call it a pivot, Sonia, but slower pace definitely, right? So pivot would be like they stop hiking and then they cut rates. They will still hike, but just with a slower pace. So there are 2 things to note. One is that, and this is the key critical line from the FOMC minutes, and I'm going to quote it, a substantial majority of participants judge that a slowing in the pace of increase would soon be appropriate. In Fed speak, in Fed parlance, in Fed language, soon means next meeting. It typically means next meeting. So we're talking about December. So, you most likely will see a 50 basis point hike, but that we already know. It's not as if we don't know that. That is one. The second is the data out of the US, which is PMI numbers, that both manufacturing and services is below consensus. And this is one of those, bad is good. Bad data is equal to good news for markets because, policy will not be as aggressive in terms of tightening. So those are the 2 reasons why perhaps, the market would be a bit more optimistic that at least the pace of hikes will slow down. What was the market reaction? Plunge across the yield curve. So the 5-year, the 10-year, the 30-year on your screen, 6 basis points and 10, 6 and 6 and 10 on the 30. the price of oil has fallen sharply. And, you know, it's the same thing. Demand seems to be falling off faster. It fell 4% or so to 84, just under $85. And I've always said this is the single most important cue for a country which imports 80% of its crude needs. Again, reasons are many. Poor liquidity is one. And I think, you know, you should be mindful. We are coming into the end of the year. It's notorious time for low liquidity, so price moves are exaggerated. So, you know, price is 85 right now, but it could reverse back as more participants come in later as we start the next year. So price moves are exaggerated. That's a given. EU price caps on Russian crude exports, that's a more fundamental reason. China COVID restrictions, weekly inventories, and of course technical levels as well. So all of this kind of coming into play, but that is an important cue for India. What's the trade setup? I mean, coming and taking all of this together, the Nifty yesterday rose exactly to the 61.8% retracement of 18,324. This is the level where the SGX is indicating the opening at, almost exactly there or slightly higher than that. So we hit this level and cooled off. So that would be the first level to stay and keep your head above for bulk of the session. The bulls would want to do it if they want to go any higher, if they have a chance to go higher. So that's the level to kind of take out and stay above. On the downside, I would still say the big one is, you know, the 20-day moving average, which is also moving up at about 18,139. I mean, it's not very far away. It was far away with the market coming up. That's also been pulled higher. Sector rotation is fast and furious. I mean, you know, you speak with people, you speak with even professionals who do this for a living. Unless you're in the right sector, you get out and get into the next one, which is coming into action, coming into the mix. It's been difficult in the broader markets. You know, railways, defense, PSU banks, something or the other. Yesterday, fertilizers came back into the mix. So it's gotten tougher in terms of broader markets. And again, to sign off, volumes are low, so keep that at the back of your mind. And US markets are closed for a holiday because of Thanksgiving today. So you won't have US cues to depend on when you come back tomorrow morning. Nigel, what are you watching out for?
Well, today is expiry, right? So volatility will pick up in the second half of trade, and the rollover picture, whether it's on the Nifty or even market-wide rollovers picture, it's more or less in line with what we've seen in the previous few series. Now, will it be a free hit for either the bulls or the bears today? Because we're on our own. The US market is shut today. Tomorrow, they are open only for around half a day or so. So it's a kind of a free hit. Let's see which way this is going to swing. And we have few bullish indicators that are coming overnight. Dollar index is below 106. You have Brent crude prices that have corrected to around $85 per barrel. And the US, 10-year yield, that's cooled off as well. So all those three good bullish indicators. The FIs in the F&O market, they continue to remain net long. Yesterday as well, they added more than 10,000 long contracts. But I'll tell you what, the bulls have missed these shots in the system. If there were shots in the system, we would have managed to cross that 18,400, 18,450 hump. That said, the problem is call writing. Yet again, 40,000 call contracts were written and two strikes were very active, 18,300, 18,350. And between both those two strikes, the total open interest went up by around 60 lakh shares. The total open interest at these strikes, put it together, is 2 crore shares, 1.4 plus 60 lakh odd. That's giving you a sense that the bears, they're still in with the fight. They want to defend this 18,350. So crossing this 18,350 hump and trading about that, that's something that the bulls want. However, there is support at lower levels. Yesterday as well, there was some shift in terms of put writing. We did see the 18,300 put, that was fairly active. 18,200 put, well, that was unwinding some positions. So that's giving you a sense that that 18,250 level becomes important. And since it's expiry, a short straddle could be in play. That's the writing, the 18,300 call as well as put. You pocket 100 rupees and you get a broad range, 18,300 minus 100, 18,300 plus 100. So the broad range is 18,200 to around 18,400. On the downside, 18,230 becomes very, very important. That's the first level of support. While on the upside, 18,350, that's a crucial resistance zone. Trading about that is important. As has been the case the last few days, don't chase the open, look to buy the dip. And then let's take it from there. For starters, SGX Nifty up and about.
Okay, early Thanksgiving perhaps, right, for the bulls.
Yes.
It's a big move that's coming in this morning, bright hue of green. So lots to talk about. As we said, the bullish trend continues. The US markets have done well. Crude is down. The dollar index has retreated. And for our own markets, it's only up and away from here. But let's see how the day pans out. First up on the equities front, we have a comment coming in from Michael Wilson of Morgan Stanley, who says that after what is left of the current tactical rally, he sees the S&P 500 discounting the 2023 earnings risk sometime in Q1 of the next calendar year via a 3,000 to 3,300 price trough. According to Mike, 2023 will be a very challenging year for earnings growth, but 2024 should be a strong rebound. Equities should begin to process that growth re-acceleration well in advance and rebound sharply to finish 2023 at 3,900 in their base case.
Well, some money market views as well, and this is coming on in the rupee. Parul Mithil Sinha of Standard Chartered says rupee came under pressure this week despite dollar weakness and drop in oil prices below the crucial $90 a barrel threshold. Trade deficit widened in October and is likely to stay elevated in the coming months. She expects rupee to trade in between 81.3 to 82.3 range next week, with dollar and oil to be watched for cues.
Okay, and why don't we get a view on the bond market? Parul says domestic yields were range-bound this week, mapping global rates. The expectations of slower pace of rate hikes by the central banks has led to a consensus view of the India MPC following suit. The credit deposit growth wedge is expected to put pressure on the short end of the rates curve. Parul expects that the Indian 10-year benchmark bond yield trade in a range of 7.25 to 7.35% next week, with global rates as the key driver.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Tata Consumer Products, Biocon, Granules, Star Health Insurance, PB Fintech, Pino Payments Bank, and Voltas. They are stocks on the back of positive news flow, while we have Tata Motors, Glenmark Pharma, and ONGC. They are stocks that could open up with a bit of a downtick. Okay, Arvind Sanger is now joining us. He's managing partner at Geosphere.